Let's get that, not the silver. We want the Korean won under there, USD KRW. Let's go. And let's show you this chart. We want 3 months. 3 months, 3 months, quarterly is good. That's a big chart, friends. It's a big chart. I'm going to take off that Fibonacci. Let's make this as big as we can. Cover the screen, bring it through. It's about as far as I can go. So what are we showing you here? What are we trying to help you see and learn? Well, you're going to learn a lot more when you come to the live trading day. That's tomorrow, in case we have a non-farm payrolls, which could in fact be further advancing this trade. Here's the currency trade we were been telling about, the Korean won. That's like that and like that.
The USD KRW currency pair shows significant volatility and structural trends. Francishunt emphasizes focusing on quarterly charts and log-scale analysis to reveal underlying patterns, removing distractions like Fibonacci overlays. Anticipated events, such as non-farm payrolls, could trigger large moves. Using HVF methodology, traders gain a strategic edge, spotting risks and positioning early to profit from emerging trends. Quarterly perspectives allow detection of breakouts or corrections invisible on shorter timeframes. Francishunt highlights that covering full data ranges and analyzing proportional movements helps traders interpret signals in context. This approach provides a preemptive advantage, allowing strategic entries and exits while managing risk effectively in volatile markets. Combining technical precision with macro insight is key. Francishunt notes quarterly trends reveal structural weaknesses or strengths that daily charts miss. Integrating HVF methodology with macro catalysts ensures alignment with emerging trends, mitigating risk and maximizing potential for high conviction gains. Before we dive in, make sure to subscribe to our channel and hit the bell icon so you never miss timely updates and exclusive insights.
Key levels of significance. Get us in earlier before everybody else. That means we're already in money when some of the pullbacks and the revisits occur. We are more comfortable than the rest. News before the news. Top stop loss is tighter. Less of a loss if it reverses and goes to the downside. So what's the pattern? Let's show them the pattern. Show them the pattern. Show them the pattern, because we're talking about HVF method. That's what you will learn if you come into our community. And it's also what you will see us implement live in the markets. In fact, you could argue you're getting an opportunity to do that right now. I am telling you can go be smart with all your friends and say, I don't know, I think something negative is going to be happening in South Korea. You can say it because HVF method makes you look smart, even when you're not. Like me, for example, it makes you look smart. Something's coming. By the way, they also have weird financial leverage in their system. The Koreans do some weird, interesting stuff in their rental agreements, in all forms of things that see systemic risk build up, call options and various other Ponzi-onomics. I think they pick it up from the Japanese from the 80s. We don't know. We don't know. We can only guess. I am watching you post. Someone's talking about Lynn's voice. Oh dear, she's never going to get away from that not too sure thing. Anyway, that's the setup. That's the setup on the Korean one. And I want to draw the upside HVF. Now, this is our draw tool. We're doing further developments in the space. We've got nothing to announce at this point, but further developments in this space in terms of what we've done already on our draw tool. It's getting exciting. We're making progress and we're moving forward on other exciting things that our community members will have some chance of benefiting. Let's just keep refreshing until it'll allow me to do my draw tool. TradingView can sleep a little bit. Yeah, it can sleep. Let's go try one more time. We wish to add an indicator. Here we go. Here we go. So what do you guys think about the too big to fail? Yeah, the AI guys with their slowly, you know, Michael Burry's got wind of them and is shorting them. A little bit of nerves in the market, hyper overvaluation, using their stock to do a lot of things. This is the reason why we're getting excited while we park up that topic for a second. This is the reason we're getting excited. That blue line, I don't need the blue line. We already have a green one there. There you go. The running of that green line, that is the original triggering event. Big time frame. It's not going to be tomorrow. This will probably run for a while. They'll only start leaking news once it's already now hitting the headlines and you've got new highs for the last 10 years, new highs for the last 15 years. Oh my goodness, the Korean one is really weakening. What's happening in Korea? New highs. Then they'll come with some toe tagging narrative. Oh, it's the deal Donald Trump did with them, or something else would happen. And then you might hear some military news or something else. Who knows what it's going to be? Give me your best guess. What could create major crisis? Will it be financial? Will it be their banking? Will it be what? I don't know. We'll wait and see, but it will come. So we have reasonably high conviction that there's going to be a major event coming out. There we go. This was a little wind up. What happened? The nice thing about this is the major Asian crisis happened last time. That's right. That HVF went from there, made its target, and actually put another 2x on top of the X you already picked up in reward. Massive R over there to the target from all the way down here on very tight risk. And then guess what? You get a further 2+ Rs. There you go. There's a dodgy 2 and a few more Rs. You ended up with a total of 3 times more than what you expected to get. When the currency is being hammered and things are going bad, what tends to happen is you get absolute hammering, and the markets skip, they jump, and they do a bunch of stuff, and there's not enough bid in there. So the Korean one, it's not the yen, it's not as liquid. And if things go badly wrong for it, you can see real big moves. They will stop allowing you to put on a trade. It'll be set to close only. Warning alert. News before the news. Make sure the brokers don't keep you out of the party, especially when you're on the right side. They don't want to lose money, and they don't want to have clients making too much money in case they haven't laid it all off and they can't cover it themselves. So this is a macro upside HVF here. You've seen how it's done before over there. Major blow off. This was the Asian crisis event. It wasn't just Korea. But the interesting thing is we're seeing more of this being localized to Korea so far. I'm looking at the yen. We see 172 on the yen. Do you remember us talking about weakness of the yen? Some of you might even recall, I want to go back to that. We're going to come back to the Korean one on different time frames while you're doing it. But some of you might recall that we were talking about the Swiss franc JPY. You may even remember, I remember the number. It was 192 CHF JPYII, and we gave you that one, and it did a very good run. Let's show you a couple of things. So the yen is going to weaken a little bit, but it's having a pullback. It's not exactly in an absolute maniac-y move, but it's going to lose going to 172. Assuming it does, it's triggered very nicely. We did some time ago give you this trade. You may recall. We gave you this guy. Swiss franc, Japanese yen. And we said, you're going to make the better part. We got a wind up, and I thought we said 192. It's 189 this time. I can't remember. My brain is tricking me. So that one did very, very nicely. See the second interim run, pullback, major gap. I remember that gap. It was on Sunday. It was a Sunday night starting the new week. Target made, churn here. So the Swiss franc has gained a lot of strength against the yen. What will happen? The yen, remember the yen against the dollar. So we see the dollar being one of the beneficiaries of strength. USD JPY. That's why we're trading it on the Korean one side of things. Bigger time frame, we're on a daily. Let's take it up. We're showing you FX today. We're showing you FX, special FX. Special effects. Here we go. That's set up over there. That's maybe the one that is 172. That's it. Maybe I got my numbers a bit mixed up. A little bit of a rising wedge. You made the first interim already on this. There's that Sunday gap. Pop from roughly our midpoint. That's a long way away, friends. If the rising wedge brings it a little bit of a pullback, it doesn't seem to be weakening chronically right now, like the Korean one is. I think it's going to have a real specific Korean aspect to it. And of course, you're going to have the dollar strength. And if it's really traumatic, you can see flight out of Korea into that particular currency. And hopefully, I would imagine, also possibly gold.
In today's market analysis, Francis Hunt highlights the strategic advantage of entering positions early, allowing traders to capitalize on pullbacks with reduced risk exposure. By leveraging the HVF method, participants can anticipate systemic risks, particularly in markets exhibiting unusual financial structures, such as South Korea. Historical parallels, including Japan in the 1980s, suggest that hidden leverage and complex rental agreements can amplify volatility. Francis Hunt emphasizes that early identification of macro triggers provides a critical edge, enabling traders to position ahead of market news. The Korean FX market, while less liquid than the yen, demonstrates significant upside potential in the event of systemic stress. Real-time application of these strategies allows for actionable insights before mainstream acknowledgement of market events. Further, the analysis underscores the importance of cross-market dynamics, particularly between the yen, Swiss franc, and the US dollar. Francis Hunt notes that while the yen exhibits intermittent pullbacks, its broader weakness remains intact, creating opportunities for strategic hedging and gains through USD JPY and CHF JPY pairs. Moreover, Korean-specific financial stress could trigger capital flows into safe haven currencies, or even gold. By integrating technical patterns, geopolitical insights, and historical analogues, traders can construct robust strategies that anticipate systemic events rather than react to them. This proactive approach exemplifies a disciplined, data-driven methodology for high-conviction trading scenarios.
Let's get that, not the silver. We want the Korean won under there, USDKRW. Let's go. And let's show you this chart. We want 3 months. 3 months, 3 months. Quarterly is good. That's a big chart, friends. It's a big chart. I'm going to take off that Fibonacci. Let's make this as big as we can. Cover the screen. Bring it through. It's about as far as I can go. So what are we showing you here? What are we trying to help you see and learn? Well, you're going to learn a lot more when you come to the live trading day. That's tomorrow, in case we have a non-farm payrolls, which could in fact be further advancing this trade. Here's the currency trade we were been telling about, the Korean won. That's like that and like that. Let's make sure they're both log scale. Are you log? No, that's why it was looking a bit weird. Let's make it log. Make sure this guy is log as well. Are you log? Yes, that one is log. Auto fits data to screen. Yeah, auto fits data. So what am I showing you? Way back when, many of you weren't born, I was just a wee mucker. The equity market sold off quite badly. Round about 85 through to 86. And I was barely getting my final year of school done there into the 1989 crash, which was my final period in the army. 2 years of my life taken away, 1 year wasted at a university, 2 years in the army. There you go. That whole equity climb in the Kospi was dollar devaluation in the Korean won. Then the stock market went a little bit down. There you see the Korean won is also going down because USD Korean won going up. Then you had a minor move up. It was kind of a little bit flat, a little bit off, very low vol. Then we had the events that were 1996 through to over here, 1998. 96 to 98, 2 years. Real problems. 96, there it is, 96 to 98. You see the sell-off arrow that I'm showing you here, down, down, down. In case you don't think that's a lot, remember this is log scale. So the 96, you're at about whatever you were, 1200 there. And next thing you know, you're at about, on the Kospi, much, much lower. Let's just get let's get out of draw mode and show you that. These are huge crashes, guys. That low was 284. The beginning of 96, you actually had a high right up at 981. 981 on an index in stocks that ends 284 in 2 years. That is more than 66%. You're knocking on 70% stock market crash. When things go bad down Korean way, things go real bad. And what did it do to their currency with everyone dumping? You got it 780 1 to the dollar, to next thing you know, 1,800, 1,900, 1,850. So that's hectic, 780 to 1,850. You're talking about a more than halvening in their currency, much more than halvening, and a 70% crash in their stinky stoink market. Note here, each time why we do it. Down leg Korea, down leg Korea. By the way, you're not going to hear this from Brent Johnson. He's not going to see it. You're not going to hear it from some of these other maximalists and China fatalists and, this Pax Americana Coke crowd. They don't give you useful trades. We try to do that here to help you. Watch it, be the news before the news. Trust HVF method. In HVF method, we trust. This is, remember, a quarterly chart. It's not all going to happen in one day starting tomorrow. I do think it's a good move that we're having right now. It's at a key level, and it's probably going to go to our first interim, and then it'll go quiet maybe for a few weeks, maybe a month, and then it'll suddenly explode again. It's going to come in and out of your consciousness because you don't have a big time frame of thinking. You're too dopamine addicted for right here, right now, everything must be dropped in your lap. This is going to be a trade, and then it's going to have an absolute melt-up. That ended very quickly once it started to go super fast. Look at that. This is 1 quarter. In 1 quarter, you will have a candle like that potentially. That is huge. That is such a big move. And of course, it came with equity moves over 3 quarters that took you from over there to there. It's the final capitulation. But first, it inches in our direction and confirms we're probably right before it absolutely rewards you. Look at the sell-off back to this. Oh, by the way, if you don't like HVF method, you need to look at this. So the Kospi set up an upside HVF right here. Big, beautiful first impulse here, second, third, right there. It gave us a target, and that target was made, and it made it. And where did it support when it had a pullback for the 2008 mini currency crisis? Now, it wasn't that mini, let's just say, but compared to the big one, it was not near as big. It went from sub 930. By the time you were done, it was around 1600. Okay, nearly double. Your currency lost 80%, almost halved. It lost 45%. It almost halved. Your stock market, again, log scale, had a high here. High was 2085 for the index. The low on our funnel, 892. 892. That is, again, a 60% loss in the stock market. Isn't it great to have a methodology that will keep you in the loop on a major move? But it didn't happen in 1 month. 1, 2, 3, 4, 5 candles. Each candle is a quarter. You're looking at a year and a quarter that stock market lost 60%. But that's pretty damn useful information.
The USD KRW quarterly chart illustrates a historic pattern of extreme volatility in the Korean market. From the mid-1990s, the market experienced dramatic crashes, with the stock index falling from 981 to 284, over 2 years more than a 66% decline, while the currency surged from 780 to nearly 1900 to the dollar. How can traders anticipate such events before mainstream recognition? Utilizing the HVF method, investors can position ahead of headline news, capturing incremental moves before major melt-ups occur. This approach emphasizes patience and perspective, as significant gains unfold across multiple quarterly candles rather than days. By tracking macro triggers, capital flows, and FX correlations, the methodology offers actionable insight into both risk management and opportunity in high volatility markets, ensuring traders remain informed and strategically positioned. Stay connected with us by subscribing and turning on notifications. You won't want to miss any of our latest updates. Thanks for watching.